CNBC with the Fed decision on rates.
No change in the federal funds rate. The Fed funds rate remains in a range of 1.5 to 1.75%. The committee judges the current stance of policy to be, quote, appropriate. It was a unanimous decision, the first unanimous decision by the Federal Reserve by the Mark Committee since the April and May meetings. No dissents either way, that means. The median forecast no longer sees a rate hike in 2020 that had been built into the September forecast. We have a new forecast this year, this meeting, and there's no longer a rate hike built in. Some division over 2021 where several have multiple rate hikes built in. But only one is the median of 1.9%. The long run rate for the funds rate remains unchanged at 2.5%. The future of the economy, very much the same as it was. In fact, I don't have any changes at all. Labor market remains strong. Economic activity rising at a moderate rate. Job gains solid on average. Unemployment rate remained low, and I could go on. Business investment exports, the only weak spot there, and inflation running below the Fed's 2% target. The Fed continues to monitor global developments and muted inflationary pressures. So those two things very much animating Fed policy, very much on its radar there in terms of what is behind or motivating policy right now. Finally, a little bit on the unemployment rate. They lowered the unemployment rate forecast to 3.5% from 3.7%, and the long run rate actually down to 4.1. That's a sign that the Fed, at the current rate, is willing to tolerate a lower unemployment rate, and that's a number that, as you know, over the years has come down and down and down.